Hello and welcome to Vested Interest. I'm Shane Green and I'll be your host. Now, what if I told you you could make investments today that will not only secure your financial security, but also your children, your grandchildren, and even your great-great-grandchildren? What if I told you that it's not only possible, but the income should continue to grow over time without you doing anything? I'm talking about dividend growth investing. Making investments today in companies paying growing dividends could provide passive income in the future from those same investments in the form of growing dividends, propelling that income stream to grow over time as the company's profits grow and they increase their dividends. There are many companies called dividend kings that have been doing just that, growing dividends for 25 years or more, and dividend aristocrats that have been growing their dividend payments for over 50 years or more. This is the strategy I'm utilizing, and today we will cover some of the companies I've chosen to invest in so far for the month of September. This week, with a little pullback, many of these companies are on sale, and this is a perfect time to lower my cost average. This is also why I continually add to my positions when I get paid, as I can bring down my dollar cost average when these pullbacks occur. So now, let's get to it. We started out on September 1st. We invested $1,994.54. The companies that were purchased were 3M Company, ticker MMM, 1 share, 6 shares of Intel Corp, ticker INTC, 1 share of General Dynamics Corp, ticker GD, 1 share of Johnson & Johnson, ticker JNJ, 1 share of Lockheed Martin Corp, ticker LMT, 1 share of Huntington Ingalls Industries, ticker HII, 1 share of Union Pacific Corp, ticker UNP, 2 shares of ExxonMobil Corp, ticker XOM, 2 shares of Leggett & Platt, ticker LEG, 1 share of Enbridge, ticker EMB, 4 shares of Lumen Technologies, ticker LUMN, and 1 share of Kraft Heinz Company, ticker KHC. Moving on September 2nd, we actually started the day with a sale. We sold 104 shares of Ericsson, ticker ERIC. With the funds from that sale, we reinvested $1,250.63. We spread that investment out over the following companies. We picked up 3 shares of Chevron Corporation, ticker CVX, 4 shares of ExxonMobil Corp, ticker XOM, 3 more shares of 3M, ticker MMM, 1 more share of LyondellBasell, ticker LYB, picked up 2 shares of Kinross Gold, ticker KJC, 2 shares of Enterprise Products Partners, ticker EPD. Most recently, on September 15th, so last week, many of these companies on sale. We picked up 1 share of General Dynamics, ticker GD. We picked up 1 share of Huntington Ingalls Industries, ticker HII. We picked up 1 share of 3M Company, MMM, 1 share of Johnson & Johnson, ticker JNJ. We picked up 4 more shares of Leggett & Platt, ticker LEG, 1 share of Lockheed Martin, ticker LMT, 1 share of Union Pacific, ticker UMP, 3 shares of LyondellBasell, ticker LYB, 2 more shares of Enterprise Products Partners, ticker EPD, 2 shares of National Retail Properties, which is a REIT, ticker NNN, 2 more shares of another REIT, Gladstone Commercial Corp, ticker GOOD, 2 shares of GlaxoSmithKline, which is a pharmaceutical company, ticker GSK, 2 shares of FNF, Fidelity National Financial. We picked up 4 shares of Merck & Company, and I don't know why, but it got split up into 2 different purchases of 2 shares, all 4 shares at $72.72, and that's ticker MRK. Now, after those purchases, for a quick portfolio update, as of 9/16, this portfolio stood at $41,465.91 with a dividend yield of 4.069, paying out an annual dividend income of $1,687.41. Now for a quick look at the sector weights breakdown, we have 6.03 in communications, 2.21 in consumer discretionary, 14.99 in consumer staples, probably a little heavy in consumer staples, 11.31 in energy, 7.64 in financials, 12.44% in healthcare, 15.68% in industrials, a little heavy in industrials here, 6.61% in technology, 3.44% in materials, 11.34% in utilities, 8.33% in REITs and real estate. That's primarily in REITs. So if I'm looking at this, I'm probably a little light in communications. I'd like to get that up to 8 to 10%. A little light in consumer discretionary. I'd like that around 5 to 7%. I'm probably a little heavy in consumer staples. I'd like that around 12%. I'm pretty good with energy at 11%. Financials at 7.64. I might bring that up to around 9 to 10%. Healthcare is okay at 12.44%. Industrials, like I said, a little heavy at 15. I'd probably like that down around 12%. Technology is definitely low. I'd like that around 10%. I'm fine with the materials at 3.4. Might be a little heavy on that. I'd like that below 3% or right around 3%. So not real heavy. Utilities, I'm fine with 10 to 11%, 11.3, fine with that. 8.33 in materials, I'm actually all right with that. So little light in communications, little light in consumer discretionary, little heavy in consumer staples, I'm fine with the energy, a little light in financials, healthcare is fine, a little heavy in industrials, light in technology. So this breakdown gives me an idea of what I should look at for my next purchases to kind of even out here among these breakdowns. Now, in the next video, I'll cover any new additions to the portfolio. So let me know what you think in the comments below. Do you invest in any of these companies paying dividends? Do you have any of these companies in your portfolio? What, if anything, are you adding? Or what, if anything, are you selling? If you haven't taken a step and begun to invest in stocks or assets, I'd like to encourage you to do so. With so many different platforms to choose from, it's made investing quite a bit easier, and it's a great way to secure your financial future. Now, if you enjoyed or found any value in the content, I encourage you to join the journey, come back and check out any previous or future videos. And on your way out, give this video a like or a thumbs up, hit the notification bell, subscribe to the channel, and share to help us grow as a community. And just a reminder, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. This is Shane Green signing off. Good luck and best wishes to you. And remember, financial security comes to those who take a vested interest. And we'll see you next time.